Good morning. This is Larry Edelson for my Uncommon Wisdom market video update for Thursday, February 24th. I'm actually recording this on Tuesday, February 22nd, due to some recent travel, and I wanted to update you given the action in the markets. If need be, I will send you another video update later this week. Now, certainly there's been a lot of action in the markets, particularly gold and silver, both of them spiking pretty sharply higher on the geopolitical tensions that we're seeing in the Middle East, which are certainly very serious. However, I am still not convinced in the short term that this is the beginning of the next leg up in gold and silver. It is very easy to get caught up in the emotions of the times, add to positions, and buy more gold and silver and more gold and silver mining shares. But quite frankly, that is not what I am doing in here right now. I remain, for my Real Wealth Report subscribers, fully hedged on their gold portfolio. Let's go take a look at gold right now. I'm going to call up the gold chart that I have been following for you consistently for the last several weeks. Last week I said I would not be surprised to see gold run up and test the underside of this uptrend line that you see here that I'm clicking on, and indeed that's what it did. It also, gold ran up to pierce this slight downtrend line taken from the record high back in December and the subsequent reaction high here in late December, early January. But do note, okay, so far gold has been unable to close above this uptrend line, and here it is Tuesday already, and we're starting to see gold sell off. As bullish as the fundamentals are for gold in many different facets, and especially right now with the crisis in the Middle East, that is not a reason to buy gold. You need the market to prove itself technically and cyclically. Cyclically, there's a lot of evidence that we're making a high in here and that gold is way overdue for a correction. We did get down to 1307. I pegged this correction here, but very quickly gold exploded back to the upside. Yes, it's a volatile market, but I will not be going additionally long in gold and reversing my short-term bearish position unless gold closes above $1,453 an ounce in the spot market. If it's to do that, if it were to do that, then I would say yes, we have a solid breakout and gold is moving easily to 1600 and probably even 2000, or my minimum target 2200, and probably sooner rather than later. But that is not the case yet. The probabilities still favor a move to the downside. In my Real Wealth Report, we are fully hedged up. So we have taken out an insurance policy. Yes, we've lost the opportunity of this recent rally, but quite frankly, I'm not concerned about that. I want probabilities on my side and on my subscriber side, and we don't have that yet. Recall, I have called every major leg up in the gold market since it began, since its new bull market began in late 1999. From 255 up to 500, then from 500 to 700, back down to 620, up to 900, up to 1,000, back down to 680 in the middle of 2008 during that crisis, and back up to new record highs. So I am not worried at all about what my systems are telling me here. I might be very short-term wrong in the last couple of weeks, but I believe in the more intermediate term I am going to be correct once again, and that this is not yet the next leg up in gold's bull market. Let's now take a look at the silver chart. Silver, yes, has surprised me with its strength. It did make a new record high. That is quite surprising, and it is a testament to silver's strength. However, cyclically, the time is not yet here for silver to really truly explode to the upside and hit $50 an ounce, its 1980 high, or go higher. That will only come after we see a solid correction. We did get a correction down to $26. That was not enough price-wise or timing-wise, in my opinion, according to my models. This latest spike up in silver is actually, in my opinion, far more dangerous than anyone would like to believe right now. And indeed, based on Tuesday's action, this single last bar that you see here, silver is already down over $1 and change in early morning trade, and it looks like on the chart it is putting in a outside reversal to the downside, which would be another indication that silver is topping. Silver is a very wild market. It is a very volatile market. It is a very manipulated market. And I really am not an advocate of speculative positions in silver except when the odds are in your favor. I do have on a speculative position on the short side for my Real Wealth subscribers. We are holding that with a tight stop. I still believe silver can quite easily fall very, very sharply down to $23 an ounce. And that is what I am still maintaining at this point in time. If anything needs to be changed, I will update you via a flash alert if you're a Real Wealth Report member, or via a column, or perhaps another video for Uncommon Wisdom readers. Let's now take a look at the dollar. The dollar is still pretty sickly. It has managed to rally just a tad basis of the dollar index, but as you can see from this chart here, last week I told you the dollar would remain largely sideways in this trend channel here, and that's indeed what it has done. You know, given the crisis in the Middle East, in years past there would have been a flight of safety to the dollar. There's no question about that. But that's not really happening right now, and I think that's a telltale sign as well that, you know, the dollar's not that safe. Quite frankly, what the emotional reaction has been over the Middle East crisis has been rather to buy gold than to buy dollars, and hence we've seen the spike up in gold. But then again, gold has not made another record high, which is a non-confirmation when you consider the split between the record high in silver and not a record high in gold, and also the lack of follow through in any direction in the dollar. So this is, in my book, a sign of increased volatility, but no real substantial changes, certainly on the intermediate term or long-term trends, and certainly not really on the short-term trends, other than introducing high-risk volatility, which emotionally traps scores of investors into making the wrong decisions. Now, I want to take a look also at the Dow Industrials. Here, I've been right as rain also. You are beginning to see the Dow spike up to that 12.4, 12.500 level, but I maintain my view that the Dow's rally is running out of time and strength. We are seeing substantial divergences between, for example, the number of advancing stocks in the U.S. stock markets versus those declining. That is, more stocks are actually declining than advancing now, and yet the Dow Industrials pokes higher. That is a very, very negative sign for the Dow Industrials, for the broad markets as well, and I would not be surprised to see us edge near an important intermediate term top here in the Dow Industrials on a short-term basis. I do not want to be heavily invested in stocks in here, with the exception of hedged natural resource stocks that have been bought a long time ago, such as gold mining shares and other positions that I've recommended. Having said that, I do expect still a rather sudden, sharp decline in the broad stock markets that will catch most investors off guard, substantially off guard. And keep in mind that long term, a new bull market in the in the Dow Industrials first, has been confirmed by 2010 year-ends closing in the Dow Industrials. After a solid correction that will throw most investors completely, and professionals, off guard during 2011, and I expect that before June, perhaps even before the end of the first quarter, that is March 31st, we will see after that the Dow begin a rally eventually to new highs by 2015, quite substantially higher than the record highs of previous years. I'm talking 20 to 40,000 on the Dow, as the monetary system completely breaks down. The dollar completely breaks down, and we begin to see very serious talk in architecture for a single new world currency, or perhaps a dual tiered currency where countries for sovereign reasons are allowed to keep their domestic currencies for domestic trade, but we have for all international transactions a new international currency. This is something I forecast many, many years ago. It is coming to fruition now. You have seen and heard the reports issued by the United Nations, by the IMF, and by the G20, and it is happening. And I have put you on the leading edge of this trend, and I will keep you there. Till my next update, this is Larry. Please be well.